All right, I'm
Good.
good.
Yeah, hi, how are you? How are you
Oh,
today?
now I'm frantic because I thought it was for 10:15 Central Time, and you've been waiting while I hook up microphones and webcams.
Yeah,
Sorry about that.
it's always, yeah, 10:15 Eastern. It's okay. We still have some time. I've told the community about 100 times how you were bearish China before the collapse, that, personally you were in Yang, and, that's a bearish China ETF. Congratulations on that call, Anthony.
Well, China sure turned out to be bearish.
Yeah, that was a nice call, and you did it while we were still in the parabolic move to the upside. So that was not an easy call. I mean, now everyone's there in bearish China. It was very contrarian there. So I'm interested in what your views are, the current state of markets based upon your work now. Do you know how to screen share here in
Oh
the
yeah,
Hangout?
let me close some windows so I don't have any freeze ups or anything.
Okay, because
Which
you go the upper left hand corner and click that green box with an arrow and it says screen share,
okay.
and then we could take a look at your work.
Let's see. I believe I'm on the left screen. I hope I don't lose you here. This is all right. Close these tabs. Um, Let me get my screen ready. And let's look at the action where we're at this morning.
So I guess the big question is, and I have my views, the August 22nd flash crash lows that we had in yen and S&Ps, et cetera, et cetera. I've heard people say, like Carter Worth, it's a foregone conclusion that we're going to take out that low that we made in August. We've been recovering ever since. Had a pretty negative reaction to the Fed Thursday. We're getting the Pope pop today, and I'm
Oh,
looking at
is that what they're calling it?
that's what I'm calling it.
Okay.
Yesterday I tweeted I'm looking for the Pope pop into Wednesday, Thursday, into the equinox, and looks like that's happening.
Are you getting the chart now?
Got it.
Okay. That flash crash was unbelievable. VIX 50 plus,
Yeah.
and pretty untradeable, and still not
I don't
really.
know. One thing I noticed, the VIX didn't open, Anthony, but I trade the TVIX,
Right.
and actually that opened.
This
Even though the
morning?
VIX didn't open for about 30 minutes, and
Oh,
I actually covered that opening and
yeah.
re-entered, on the Fed, and then got out the next day. So I'm kind of inconclusive here. I'm thinking maybe at least 1990, and I really can't even rule out maybe taking out that Fed reversal high. But I see you have a red line. Is that around the 1985, 1990 level?
1982, thereabouts. Yeah, 1985. That's where support broke down on
Thursday.
Friday. Well, we sold into the Fed Thursday. It broke
Yeah.
support Friday, and you can see my green up arrow there on the blue line.
Right.
And so first, I think we want to retest this 1985 level, and I don't like that it gapped up, but short term, this is the past month where what we've been dealing with. We built a base
Right.
with a higher low, so we caught a huge run here, and the pullback. Here it started to get sketchy and overbought into that Fed. The VIX has just died, and
Yeah. So does that imply that perhaps we could go to where your wave C would be, up around 2050-ish?
yeah, I could show you that. Well, that's a 1 minute chart. Yeah, we got a little VIX action into that sell-off on Friday, but not real fear. Just you can see it hit this
Yeah, I
red
thought it
line.
was a weak response in VIX to that negative action Friday.
Certainly was, yeah. And so the VIX is weak, and until we see the VIX move again, then there's really no fear here. My take is this is because of window dressing into the end of the month. People are rebalancing. They're not really panicking out. They're putting money to work, taking money off. I think we're seeing a sector rotation out of, well, we saw tech and healthcare get killed for the first time in years on that flash crash. In the meantime, oil had bottomed. We were looking for the bottom in China. I think we found that. And
yeah, I'm seeing Elliotticians labeling this bounce in China as a 4 with one more wave to the downside before a much bigger rally.
let's see, getting an error there. It looks like it's going to trade into a broadening top. And I'm still seeing a broadening top on a lot of indexes. It's hard to believe we could make new highs after what's going on. But if energy rallies and China rallies, emerging markets, and money comes out of healthcare and tech stocks, I'm not really sure. I think it's being balanced, and they've been selling energy and selling gold miners, and what else has been getting killed? China.
Well, the gold miners have responded not fantastically compared to the dynamic recovery in gold. I'm actually hoping there's another decline in gold because the junior miners look like they're starting to act better than the majors, and I think there could be something there. I know I sound more like a stock guy than an FX guy, don't I?
I'd like to catch the bottom in gold miners. I think everybody would.
I think GDX might, if this isn't the bottom, GDX, I have a target around 10. But this is your interview. So looking at, can you just show that VIX again? It looks like you have a broadening top in VIX too.
Let's look at a couple different...
Yeah, megaphones everywhere.
Let's take a look at a few different views of the VIX. And it's one of the hardest things to chart. So I watched a lot of different views. I don't know why this, there it loaded. Well, there's your 55, 53, 29 high.
Yeah.
And now you see it pulling back, and it looks like there's support at the 200-day where my pink line is here.
Where's that, under 18?
But you can see it totally broke down. It bounced off the top of this purple triangle. And then it just fell through it. So
so that's what makes you sanguine for potentially 2040, 2050 in the S&P.
2040, 2050. Let me check that.
Well, you had a C labeled up there.
Oh, okay.
When you were showing the 1985 resistance. Yeah.
Let me check a couple.
I tell you what, instead of me leading it, pretend we're not talking.
Oh, yeah, I see what you're saying, 2040. No, you're right.
Okay, pretend we're not talking.
Memorized. Okay. Let me go to that chart.
So imagine that we're not in an interview and you're working at your desk right now.
No,
okay?
I appreciate that. You know where this 2040 level is. I'm not really watching that. I wasn't watching it this morning.
Yeah.
But you can see this triangle here.
Yeah.
That's where that 2040 level comes in.
Yeah, but you're thinking down before up there. Down into up.
Yeah. I think we're in a pullback. Today's bounce and could possibly last all week, and then we see a move down.
Okay.
We see a move down in financials. This is where I think we could go retest or take out the low in November, and then rally into the end of the year.
Okay. Very complicated.
Back to that check.
Very complicated patterns. Does the complications of these patterns here? So you have highs in November. The complications of these patterns in
right. This is another scenario.
Kind of, are they indicative that the market's corrective rather than impulsive, which makes you come to the conclusion that this is just a correction rather than the beginning of a bear market in equities?
Well, we don't see fear holding up, and so I've got to stay a bit bullish. I was bullish into September after the crash, and the market's held up. I think we're looking for a back test. But when I look at like the broadening patterns, let's look at it. I'm sure I've got one here. Probably the better. I can't get these to load the way I want them to. Here we go. Well, you see, this is the BKX, the banking index, still in a broadening pattern, still in a range.
Yeah.
And I would expect it to continue to consolidate here, and that could last a couple more months before we see the bottom of this larger triangle taken out again. From there, they could make another run at the highs.
Okay. So really, this is the kind of market that would drive a position trader crazy.
Oh, yeah.
And, that's kind of my bias with this. So it's almost telling me I could almost, I should be looking for 2-3 day moves and be a guerrilla warrior, go to the door, and then wait for the next setup, because I'm really not going to miss anything because we're still ranging, although the ranges are expanding.
Well, yeah, this range here is really expanding. And you can see how we could possibly rally to a new high in the spring. If this is wave 3, it's going to be a powerful wave. From what we've seen so far, it is powerful. At some point, we're going to get a pullback to support, but that may not. If it breaks out above this red line again and gets some traction, it may not happen till November, and then new highs. Thing is, I can't find this pattern on the S&P, and financials are bearish, so I don't know that it's just going to do that. This is a broadening pattern on the weekly chart, and you can see it would have to come down to the 200-week, approximately 1750. This may be the first leg of the larger correction, just like I showed you in financials.
And your blue moving average is what? It's a 50, and that comes in around 20.5 that you were just showing, which kind of lines up with your C count.
Well, yeah, if it continues up in a little triangle like this, this would be the first leg up in a new high.
Oh, I'm confused.
It would fall out of this triangle. I mean, the Nasdaq's trading the same way. We've seen it they just rushed in, and it hasn't fallen out of this upturned pattern. I painted this because this is typically what you see in a wave A. I mean, I can hardly imagine that this would continue like that, but
so what are you doing in here with all these conflicting patterns? Staying flat?
no, I'm trading this short-term chart that we started with.
Okay, so you're what, trading hourlies? Is that what you showed me?
It's actually, I'll have to go back to it, tell you exactly what chart that is. Oh, there's a good view of that triangle. And it blew out the top of that triangle and hit resistance, and it should come back. Today and this week, I've just been watching that short-term view, and it's been basically stair-stepped up. It sold off here. It fell back to the blue line. This blue line.
So are you a seller above at 1985?
Yeah, you'd have to sell there, but I think it's probably going to get through there. And let me see if I can find a smaller broadening triangle. It's definitely confused market right here.
Megaphones are indicative of a topping formation, but a disorderly market where people get bullish at the top of the megaphone and bearish at the.
Well, you can see this one on the Riffin, which is the Russell Financials, and it traded up into a broadening megaphone top in wave 5, which this looks like the top. You see some where it broke out here during the holidays, which that's low volume and manipulation as far as I'm concerned. But you can see this megaphone looks like it topped. It fell out of the range and looks like wave 1. So we saw the first leg up. I think we need to see a pullback and then probably a retest of the highs where we know. Right now, the short-term chart is working this week, and until that stops working and the VIX, we see some action in the VIX, then there's no fear. And you knew the VIX wasn't going to stay at 53. And a lot of people were calling for the VIX to remain high, which relatively it is. It's above 20.
Yeah.
We go back.
A question from our community. Do you suggest that the SPX could be a nice long for the new year? And
No.
No.
I
think you're talking October for a low.
If we pull back to support and the VIX falls below 20, I'd say yeah. But you know, it's day by day with this market.
Okay.
So I have to. It takes constant vigilance just to stay on top of it.
Yeah, it's a young man's game. What are we still doing it for?
It's giving me more gray hair, that's for sure.
Well, at least we have our hair.
Oh yeah.
That's your silver crown. Okay. So all right, here we go. Here's another look on the 60-minute.
It's another view. Or yeah, I think we're going to probably trade in this. If this is wave 4, reminds me of 2009 because everybody wondered. It sort of fell out of the. It just crashed the same way into what turned out to be wave 3. And everybody wondered, well, was this wave 2? Because it really doesn't look like it. I don't know if you can see my pointer.
Yeah, I do. We do.
But is that a 1-2? It doesn't really look like much of a rally.
Yeah.
Or was that wave 5 failed, and this is wave 1?
And that was a truncated 5, yeah.
But after a crash like we saw, you would expect it to consolidate like this. And if this is wave A, then you can see a pullback into wave B and then a stronger rally to that 2040 level.
Okay.
And 2044 even. I'm looking for a broadening.
Go ahead.
I'm looking for the broadening pattern. It seems like the S&P didn't make it, but the Dow did. Let me see if I can find the chart real quick.
What do you make out of this gold rally? A bear market rally or the beginning of something? And
I think it's still early. I do like gold here, but I don't think that we've seen the top in the dollar. Well, I think it's going to retest the highs.
The dollar?
Yeah.
You mean the 97, the 100 level?
Well, it's traded into another broadening top.
Mm-hmm.
First, this is the Dow.
Yeah.
So, if the Dow can hold up and trade into a broadening pattern, that's it. So you can see new highs into the spring, and then another crash into October, and another rally into 2017 into the election. But the S&P doesn't look like that, and that worries me. I mean, I see a broadening top on the Nasdaq, on the Dow. Here's the New York Stock Exchange. And this is long-term support, which got taken out, but it immediately got above that again. And so I've still got this labeled wave 4. I think that's what you mentioned. People have that labeled wave 4.
I forgot.
But there's another broadening pattern on the New York Stock Exchange. If the charts start breaking down below where we crashed in August, then it's going to get sketchy. It's going to get, I think, long-term support levels are going to break. I can show you where it crashed to. Let's see, those are stocks. We were watching that 1900 level for a long time, and it turned out to be 1867, which is pretty close looking at a weekly chart. And we saw velocity, which we would expect to see in a crash. And I'm 100% certain we're going back down to take out the lows of 09
But
this
not until new high in 2017.
2022, 20, yeah, somewhere a couple years out. I'd say 3 years from now we're going to be in crash mode for sure. But when you look at, and you see here, this top purple line, it was driven back above that resistance and held up there for weeks. Well, if that's where the smart money got short, then we know why the market's crashing.
Okay, well, this chart says no new highs. That
That's right.
we have one down on this chart.
Right, and this view, this weekly view, shows that we're actually trading below that purple line. Well, we are. And we could even get a retest of the lows and then another rally, but you'd expect a zigzag, which after a crash, you'd expect a consolidation, a simple A, B, C. I think we've seen the first leg up. We're going back down, but you can see this blue triangle also. It's possible that trades into a broadening top, but not with my money, and not with the VIX trading at 20. Again,
maybe this is a great buying opportunity in the VIX, Anthony. Around the 20, we spiked down to 1780 and we bounced to 23. Maybe we retest Thursday's lows, or maybe even take them out and go to 16, and then we go at least back to 35. What do you think?
Well, once we're rallying right now, the VIX shows no strength, but let's go back to that weekly chart, because I don't think this rally is going to last. It could last the week. We could even see a higher, like that for 2044. If this is a 2-point move in a correction, then maybe the top of this blue channel is actually wave C.
That's what I'm
I'll
saying.
show you how we get there.
A lot of ifs, and then if it does that, it could do that, and if it does that, it could do that.
Yeah, that's
not a lot of clear. Not a lot of clear, definitive, and it's never for sure, but not a lot of clear, definitive counts here. There's so many alternate counts.
That's true. We knew to sell the news, and it pulled right back to where we thought it would. So we knew not to be long here. I mean, this short term is working. I think maybe selling this 1885 levels, getting a little early. I mean, it's oversold on a 2-day basis, especially if the VIX stays down. I'd like to get bearish here, but it's difficult. The VIX 1 minute. The VIX 1 minute doesn't tell us much except that the VIX is weak, and it's fallen below 22 support. I've got one VIX chart that shows fear could totally come out of the market, and so you don't want to be buying the VIX when it gets taken down below 20. There's just too much risk trading the VIX there. A good trade would have been to sell the leveraged VIX at 53.
Mm-hmm.
That takes, you got to be brave to do that. That was a ridiculous.
Option writers made a fortune selling puts after August 22nd. Selling VIX calls.
Interesting. Well, there's support here at the VIX 16.
Yeah.
I've got a bunch of different views of the VIX. I should have showed you the energy chart, because energy is bullish and in its own broadening triangle. I'm having trouble with charts loading again. Let's see if we can find the oil service sector. And there you have a beautiful broadening pattern.
So you think this implies about $70 oil into next year?
I thought oil could easily go back to 70, yeah.
Okay. So the weakest sector could be the strongest sector going into next year. So the
Definitely.
minute everyone wrote off commodities, they're a great buy.
Yeah, they're wrong. I mean, short term they could be weak because like I said, the dollar is probably going to retest the highs. But then we're going to see commodities, oil. We've seen everything, steel, all the commodity stocks getting just killed.
Yeah.
But they came in and bought
Even
that.
Dr. Copper is showing some life, isn't it?
Oh yeah, definitely copper, aluminum, even coal. I mean,
That's what I got for Christmas.
coal isn't going to zero.
That was in my Christmas
Coal, I think.
stocking. A couple lumps of coal. You ever
I've
get
been
that for
watching coal
Christmas?
for a long time, and I haven't been as bullish on coal until just a couple weeks ago.
Okay, well, be careful. It leaves black stuff all over you. Okay.
But there you see the correction in coal. Yeah, you get your hands dirty.
Yeah. Yeah, so okay, so we're getting a little bit of big picture that maybe we're close to a capitulation in commodities, and they may be the stars in 2016.
Definitely.
Okay.
Let me show you
And,
that.
and indecision and all kinds of crazy counts and stock indexes and VIX and your clearest work right now is showing what's happening in the oil shares.
Oil, energy, China. You know, it was bearish China last time we talked, and it's basically amounted to an ABC correction in this downturned channel. Saw
Okay.
it made a high in April,
Yeah,
and then we saw a powerful wave C.
yeah.
And everybody, I think, is bearish China here. I'm long China.
Can we get one more shot down on China to the new lows before the bigger rally? It looks like your line would show that that's a possibility.
And this is the broadening pattern. See, well, this new high was an ABC move, which wasn't a bullish move. It was a head fake.
Yeah.
And then we fell into wave C of what was probably wave 2. So it's a C2. Anyways, it's a normal correction. And I don't know if it matters, but the Beige Book came out today and said that China's fine and the bearishness is overblown. But so I'm bullish China now, and it could rally to new highs.
Well, that will give since Janet said China, that will give the Fed a comfort level. I interviewed a guy named Ed Matz that said the A shares, once they get back over 3,700, would give the Fed comfort to go ahead and tighten.
Right. I don't know if they will tighten though, because what if they tighten and then have to come out and cut again? That's going to cause real panic. But I think that would be fun.
Yeah, a Trichet move.
See this little it's headed. I don't know if it's down today or not, but the U.S. dollar.
It's up.
You know, we caught this crash in the U.S. dollar and thought, oh boy, and then it's been a mess ever since. And this looks like this would have been the top, but it goes AB and then it goes into this little broadening top pattern. So that would be a retest and possibly a little breakout to 100 again. It could even shoot out the top and go above 100. Everybody will get bullish, and then I think that's the end of the U.S. dollar.
Let's see your time frame on that.
How I figure time frames is
like,
just look at previous, like past performance and how long did it take to get from point A to point B. I'll let the chart would load. And so, let's see, it took
looks like you're looking towards November-ish.
May, June, took 3 months to get here. Took less than a month. Well, the corrections are devastating, and then it takes forever to get back up to the top. And wave 5s are typically weak. So I've got 93.40 here as support. If it continues to fall off, and then a run at the top. So maybe commodities stay weak until then. I'm not really sure on that.
And that would be what, November, December for a top in the dollar, or next year?
October. Oh, this is the U.S. dollar, a U.S. dollar top in October.
Okay.
There's the 20-year dollar. I think the dollar's coming all the way back down, just like the rest of the market. But, it was great, like looking at the yields on, there's a U.S. dollar chart in a panic wave. So everyone will think the dollar's going to zero. That's an alternate count. So if it trades back to a new high, it could still break down like this. So, I mean, I've got every scenario covered in case we see that happening. Then I have targets.
Do you have preferred biased scenarios? Or are you trying to eliminate the bias?
I eliminate the bias entirely.
Okay.
Like today, I'm bullish because the VIX is low. I don't have any fear owning the market here. If the VIX gets back above support and starts moving, then there's fear in the market, and then I'll get bearish. I try to remove all that bias.
What's that line in the sand for the fears?
Weaker. Like you saw what happened when the VIX crossed above 20. Everybody panicked, and that was on an OpX, totally unexpected, and who knows if it was planned, but I mean, I can't believe the move we saw in 3 weeks.
Okay, Anthony.
3 days the market crashed when it got above VIX 20, and everybody thought the world was going to end. Right. And now we see the market trading sideways again, like it did in August. So we're not in a crash. Even if this was wave 1. It has to consolidate longer than this before we can see another move down, because it would have to trade down in a downward channel, and you want that channel to be wide enough for it to fall into wave 3.
I want to thank you.
I don't know if you understand. Do you guys trade channels?
Yeah.
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 So your channel has to be. See, now here's another view of the, this is actually the NASDAQ. This is 1, 2, this is 3. Well, wave 4 shouldn't interfere with wave 1, and this Elliott wave stuff, but you can see it hit resistance here. It wants to pull back, but it's probably going to hold up in here for a little while longer, possibly even to the end of the month.
Yeah, I don't see your charts right now, so nothing.
Oh, okay.
I see your box. But I tell you what, we've run a little bit over. I do want to thank you for pinch hitting for someone today, Anthony. And what's the best way? Do you mentor people? Do you teach them? Or do you just putting your tweets out and your work because you want to share your work with people?
Yeah, I want to share my work with people. Follow my Twitter. I'm still blogging and doing updates, but that takes away from my time charting. So, but I'll announce updates, blog updates from my Twitter.
Okay, and that's at 3X Traders, Anthony Allyn.
That's right. 3X Traders is the Twitter handle. Just 3X Traders.
Okay, at.
Right.
You gotta use the at on Twitter, right? All right, buddy. Well, good luck on the long and winding road. It's like the road to the Wizard of Oz in the S&Ps here.
I'm sorry we got our signals crossed this morning, and it kind of caught me off guard. So let's get together again soon.
Okay, buddy. Good hunting. Have a great fall trading season, Anthony. Thank you for your time and your looks today. Okay, buddy?
All right.
All right.
See you later.
Take care.
Bye.